The rupee just hit an all-time low of 93.5. Everyone is panicking, but historically, rupee crises have been the best times to invest in India. Let me give you some context first. Now, the rupee fell 1% in a single day on Friday, which is the worst drop since Feb 2022. It breached 93 for the first time ever and crossed 94 in the offshore markets. Now, obviously, this sounds terrible, but let's look at some data first. In 2013, during the taper tantrum, the rupee crashed 20% in just 3 months. The current account deficit was 4.8% of GDP, and India was called a fragile 5 economy. But within 18 months, the rupee stabilized and Nifty went on to rally more than 30%. In 2018, the rupee fell by 12%, worst in Asia that year, but again recovered within 6 months. Now let's look at today. Yes, FIIs have pulled $9.8 billion in March. Yes, crude is at $107. And yes, RBI reserves have dropped by around 11 billion. But India's current account deficit today is just 1.5% of GDP, not 4.8%. Our forex reserves are still over 700 billion. And a weaker rupee actually makes our Indian IT exports and services more competitive globally. Now, the real problem is not the rupee number. It is the oil price. And if oil stabilizes, rupee always follows. But what I've done is I've made a rupee crisis portfolio checklist for you to see. Comment INR below and I'll send it to you.